Wow, it's great to be here. My name's Gary Fowler, and this is GSD Presents Silicon Valley AI and Technology. So it's with great honor that I introduce a friend that's I've met first, I think, in Russia. I don't know if it's a Churchill Club or Russia, sometime many years ago now, but it's
Right.
great to
Okay.
have Bill here. Bill is really a legend in Silicon, actually not just Silicon Valley, around the world, and a very modest guy. So Bill is the Pegasus Ventures, Garage Technology Partners. I mean, I was even looking, Bill, you were in the rowing club at Harvard University as an undergraduate when you got your bachelor's degree. So it was, or the rowing group. So quite a clear history. Stanford MBA, and all around good guys. So, Bill, it's with great pleasure that have you on the show today. So appreciate you taking time out of your busy schedule to talk to our audience of entrepreneurs and venture capitalists from all around the world. So great to have you here today.
Well, thank you so much, Gary. Yes, delighted and honored to be here, and happy to talk about whatever you want to talk about.
Well, you got this amazing book. So you've talked about wow for a long time. And I know you've done it to students that we've had from our accelerator. I've heard you in presentations all over the place talk about wow. And there's some things that were just, we talked about, I read your book and I looked at some of the factors. You say investor motivations, love, greed, status, and fear.
Here.
And I should, so how do those work? Like, what is this, like a love kind of a tough love relationship or what?
No, well, so I just as a little bit of background, as you know, Gary, I started my career out here in Silicon Valley as an entrepreneur on the entrepreneur side of the table. While I was a grad student here at Stanford, I wound up starting a software company, sort of by accident, but it was an interesting journey, and that company actually it took off, and then one day it crashed and burned and blew up. So, but you know what they say, right? You learn more from your failures than from your successes. But the great thing in Silicon Valley, as you know,
something, Bill, it doesn't feel as good, does it?
That's a good point, right? So, but yeah, no, I mean, right. So the great thing about Silicon Valley is when you crash and burn, you pick yourself up and you dust yourself off, and then you spin the story a little, and then you do it again. And so I was able to do it again several times, becoming a serial entrepreneur with 2 IPOs. And then I got into the venture capital side. And when I became a VC, what I discovered is that a lot of what they had taught me as an entrepreneur about connecting with VCs was just wrong. And what we spend most of our time coaching entrepreneurs about their pitches, about their stories, is based on the assumption that VCs are these astonishing brains that have these embedded algorithms that can intake all of this stuff from all these entrepreneurs, run it through an algorithm, calculate an internal rate of return, and make these brilliant investments. So that's what I thought VCs did. And then when I became a VC, we were funded by Sequoia and Mayfield and Draper Fisher, and the top tier venture capital firms funded Garage Technology Ventures to be kind of the farm team for Silicon Valley VCs. And so I went to my new VC buddies and I said, okay, so tell me, what's the algorithm you guys use? How do you? And they would look at me and they would go, well, Bill, we invest in teams, it's teams. And I go, okay, so what are the analytics? What's the data you use to assess the quality of a team? And I go, well, it's kind of pattern recognition. After 5 or 10 years, you'll get the hang of it. And I go, oh my God, this is venture capital? Are you kidding me?
Sounds like some BS to me.
Well, so, to get to the answer to your question, I mean, it's So we tried to figure out what causes VCs to invest. And in the epiphany that I had was that VCs do not invest with their brains. VCs invest with their hearts. The secret for entrepreneurs is to get them to fall in love with you, to get them to say, wow, that's amazing what you have, right? Wow is not an intellectual response. Wow is not an analytic outcome. Wow is an emotional response. And generally, wow is a response of, love or desire or maybe greed, could be fear. But the point is that you've got to connect with the investor emotionally. You got to tap into something other than just their data repository, right? If you just feed them a bunch of stuff, they'll file it away and maybe they'll remember you. But if you want to separate yourself from the pack, you got to get them to wow. You got to tap into their emotions. You got to get their heart beating faster. You got to get their pulse racing. And that's the whole point. That's the whole point of getting to wow.
So that's a good segue.
Yeah.
Love it. So you talk about, what is a fundable company? So what are the elements? Because, I hear about it. I'm on myself 3 or 4 panels every single day around the planet. Yeah. What is a fundable company? So if you look at it, what is it? If it's not the team or that's part of it, what do you look for? Or what do you look for?
So, so venture capital is a unique type of financing, and it's not for everyone. And so it is the nature of venture capital that as an, alternative investment class, we are trying to earn disproportionate returns to sort of safe and stable and risk-free assets, right? And so what that means is, as an entrepreneur, if you want to tap into the venture capital ecosystem, you've got to show that you can generate a 10x return. It's not, and there are all sorts of numbers that get floated around. Academics talk about internal rate of return. VCs never talk about internal rate of return in their investment committee meetings. They have to talk about it when they publish results to Cambridge Associates and that sort of stuff. But practically speaking, right, VCs are looking for minimum 5x, preferably 10x, ideally 20x returns. So the characteristics of a company that can do that are very, very narrow. At the core, you've got to have an extraordinarily compelling value proposition. That means that it's not going to take a ton of money to convince people to buy your product, right? So sort of the economics, financial returns of venture mean that you've got to have this extraordinary value proposition that is supported by a sustainable competitive advantage, so that you have this advantage for some period of time that will enable you to acquire customers efficiently and rapidly and grow fast to a size where you can deliver disproportionate profitability. So, all of those components have got to come together, and it's not easy.
So what about, so you got first mover, you got second mover, you got third mover, companies coming in for the second and third time. How can they, how does it work for the person that, the second Facebook, the third Facebook? How does it work?
Well, this is one of the great myths of innovation, right? One of the great myths of innovation is that there's an advantage to being the first mover. Absolutely not true. When it comes to innovation, when it comes to entrepreneurship, being the first mover is a really bad place to be. So name for me a successful first mover. Facebook was not a first mover. They didn't invent social networking, right? Google was not a first mover. They didn't invent search. You know, I mean, Netflix certainly wasn't a first mover in terms of distributing videos. Amazon was not the first bookstore online. It wasn't the first e-commerce store online. You know, name for me, Apple didn't invent the microcomputer. Apple did not invent the MP3 player. Apple did not invent the smartphone. Apple did not invent the smartwatch. What did Apple invent, right? So it is absolutely wrong if you think being a first mover is an advantage. The only place, you know, the reason we've all been confused by this is because at the corporate level, you know, when you are a global brand and you've already got bazillions of customers and you're competing with these other guys in the marketplace, getting the next, you know, innovation out to the market first is an advantage because you've already got a bazillion customers, right? But in a new market with 0 customers, being the first mover means you're the one who's got to spend all the money educating the marketplace on what the frick this new MP3 player is, right? Or, you know, what the heck this new smartphone thing is. So in any case, so being the first mover is actually not the place you want to be. You know, you want to be what is referred to as a fast follower. You want to let the first movers spend all their money educating the marketplace and creating a platform for you to then come in with sort of an incremental advantage and then steal the market from them. So again, you know, Airbnb did not invent couch surfing. Uber did not invent gypsy cabs, right? I mean, so
seen that a long time.
Yeah. So, right. And so as an entrepreneur, what you want to do is you want to find a market opportunity that you can enter efficiently without having to educate the marketplace, but by offering some sort of significant, compelling value proposition advantage over the current players, and then, you know, ride that wave to growing a large, successful company.
Oh, interesting. And you talk about the importance of the network. And you talk, you know, we hear about, I remember when, you know, we had Skokovo coming over, the MBA students, the Startup Academy, et cetera. But tell them, I mean, they think companies from around the world think they can just drop into Silicon Valley on a Friday and by Monday they have a deal cut, right? So, I mean, and I know you talk about this a lot, but can you just tell our audience, you know, what the reality is and how it works and the power of the network? Yeah.
So, you know, Silicon Valley, you know, we love visitors. We embrace visitors. We're nice to visitors. We talk to visitors, but we don't fund visitors. I mean, we are, you know, if you want to get Silicon Valley money, there are a few venture firms. I mean, there are, you know, a few venture firms that will invest globally. And Pegasus Tech Ventures does, in fact, invest globally. Pegasus has offices around the world, but very few Silicon Valley venture firms invest globally. So if you want Silicon Valley money, usually you got to make the case that you're going to use Silicon Valley or the United States as a platform for scaling to, you know, a large company. So we want to see that you are committed to the U.S. market, that you are planting, you know, a flag here, that you're sending, you know, senior team here. Ideally, the you know, top management team relocates to this market and then validates that the company can indeed acquire customers in this market. So when you come to Silicon Valley, talking to VCs is not the first thing you should do. It's, you know, it's okay to talk to VCs to socialize, but the first thing you got to do is win customers. So, you know, and then tied into that, you got to build a team that can demonstrate the capability to be successful here. If you can win customers and build a team, then Silicon Valley VCs are much, much, much more likely to fund you. So it's not going to be a kind of 1 week process of flying in, making your pitch and taking the check back home. It's not going to work that way. But, I'm sure undoubtedly there is the counterexample, right? I mean, the famous counterexample, of course, is Skype, where, Bill Draper, one of his associates, a guy named Howard Hartenbaum, happened to be in Europe, happened to come across Skype, thought, hey, this Skype thing is pretty interesting, and wrote a check from 6,000 miles away to be one of the early investors in Skype. That does happen. It does happen. So there are a few businesses that can be sort of global day one, where their marketing can be global. And in that case, it doesn't necessarily mean they have to relocate the team to the US. But that's, not generally true. Generally, you've got to acquire your customers sort of at some level locally.
What happens if they have, let's say they got, $5 million business outside of the US. They relocate to Silicon Valley. They form a Delaware corporation, relocate out to Silicon Valley. They've got a strong team, but the sales just aren't here yet. But they've got $5 million worth of ARR now, and they're growing, 30%. How do you look at that type of a company? The same way?
Well, understand again that you don't have to move the entire company over, by the way, right? I mean, so if you've launched in a different market, and you're growing in a different market, God bless, that's great. If you've got a great engineering team, that's great, because it's really hard and really expensive to acquire engineers in Silicon Valley or anywhere in the United States. So, we love that kind of leverage. If you then come over here and say, hey, we've got a brand name customer in this country, elsewhere, our instinct is going to be, okay, can you get similar brand names here? Yes or no? What's the likelihood? We'll give some amount of credibility to sort of initial conversations, but obviously you're going to be way better off if you can validate with local customers than if you're going to depend upon customers back home. So the other thought being that if you've got 5 million of ARR, back home, then you should have the experience and the resources to, build up the capability to acquire customers here. Why can't you? If you've been that successful in another market, hopefully, you've got local investors who will continue to support that success. And until you can prove that you can be successful in the U.S. market. Now, again, every company, every situation is different. So I'm, now that we've connected Garage and Pegasus, I get to look at companies, in all sorts of different markets, and so I'm now sitting on the board of a company in Vietnam. I mean, so we were willing to invest in Vietnam because this company had good traction in Vietnam, and it happened that 2 of the 3 members of the founding team had good experience, elsewhere in the world, one at Google and one in Cambridge. So that
doesn't hurt, does it?
So that gave us comfort, about the the quality and the global perspective of the team. So I mean, it's certainly, there's plenty of examples of where you can do that. But if you want to improve your odds, focus on acquiring customers before you focus on raising Silicon Valley venture capital.
What about, you wrote about, how do you speak to investors during the pandemic? I mean, this is a unique set of circumstances. So somebody can't travel to the Valley. They're growing like crazy.
Right.
You know, they're ready to go. They want to come to the Valley. They even have customers in the U.S.
Yeah.
How do they get to? How do they deal with it today?
Yeah.
Your opinion.
Yeah. I mean, so good news, bad news. The bad news, obviously, is the pandemic. The good news is that, because we are, sheltering in place or whatever, because we're locked into our, in my case, upstairs rec room, because we're locked in at home, we have so much more time for taking meetings, and meetings can be so much more efficient because, we don't have to schedule a lunch, and we don't have to travel, and we don't have, all that sort of stuff that took time before. Now, so I was up on Zoom at 7 a.m. this morning, connected to the UK, meeting entrepreneurs in space tech, at an event that was hosted in the UK. So, I get up in the morning and I'm on the phone to Israel or Germany or the UK, and, the sun crosses the sky and I'm going across the world, and, ending my evenings talking to Korea or Singapore or Vietnam, So that's good. That's good. Now you've got the same problem you had in the physical world, is how do you get the connection, the introduction?
Right, exactly.
So I can actually see more companies now than I used to, just because of the time issue and because of these virtual events. The trick, the challenge, of course, is for any entrepreneur to get to get a VC's eyeballs on the company, and then to establish their sufficient credibility that they can separate themselves from the pack, such that the VC is willing to go back to his or her partners and say, hey, I saw 12 companies this morning, 2 of them I think we should follow up on. That's so. The other way to do it then is the same way you've always done it, which is to find a warm introduction. So, every country has networks of ambassadors in Silicon Valley. You're an ambassador for a number of entrepreneurs. So every country has ambassadors that are willing to make these connections, who have relationships, trusted relationships, that they can say, hey, Bill, there's this company, you really got to meet them. So generally I'll take that meeting. Now, I know sometimes I'll push back if it's not a good fit. But you need to do the same thing. And again, the good news is, if I'm talking to an entrepreneur in Eastern Europe, it's really kind of no different than talking to an entrepreneur in San Francisco these days. Either way, it's video conferencing, and then it's just a matter of can that entrepreneur separate himself or herself from the rest of the pack and get me to say, wow, that's amazing, we got to follow up on this.
So, but remember, the rule. The old days, you go to Hobie's and you meet and you cut a deal, and you want to be 30 to 40 minutes away from the VC on Sandhill Road. But I mean, those days are out. The people actually writing checks now today without ever meeting people physically in person.
Yeah, so we have now done 3 investments where we've never met the entrepreneur in person, and except this way. We invested in a company, so. Interesting question. So we invested in a company in India a couple of months ago, and we had never met the entrepreneurs other than by video conference. So it's a really interesting question. Would we have funded them in a pre-COVID world where, you always have a face-to-face? I mean, so what we have done in the past is we have had, so we invested in a company last year. We invested in a company in Israel. And the way we did it is we found a friend of ours in Israel to go visit the entrepreneur. And while they were there, we did a video conference with our friend and the team at the entrepreneur's location. And that was our site visit. So it was, a hybrid.
A little FaceTime or a little Zoom walking around. Oh, well, show us the facility.
Yeah. Well, it was a longer story, but it was important that we have a site visit. It's our obligation, to our investors. And so we've got to somehow substitute for that in this world. In the case of the India company, the way we were able to do it is by spending time with their other investors who had indeed spent time face to face. So face to face by proxy is something that we're doing more of. So if you just look at the statistics, our own experiences, we have not slowed down at all in terms of investment pace. There have been, some definite COVID problems related to travel and that sort of thing that have slowed down, that have made some investments harder. So we do have, we got a couple of investment opportunities on the side burner waiting to do a demo. So unfortunately, it has to be an in-person demo for a couple of these technologies. But so it has slowed down some types of investments. Generally, it doesn't slow down software that much. So in terms of, pandemic hacks, so we put a section in the book, on pandemic hacks, and again, turn a flaw into a feature. Learn how to be effective at connecting over Zoom. And so there are now bunches and bunches of articles on being good at video conferencing, and it's stunning to me sometimes. How many people have not been paying attention to that? To be on a video conference and not have your camera on, that's just immediately a disqualifier. For me, if I get on a video conference with an entrepreneur and they won't turn the camera on, hello. What? So in any case, but all the a lot of the other sort of historical things apply. Back to your point about the network. So if you want to connect into a different geography, you've got to find the local nodes for your geography in that geography, connect with those local nodes because they are hopefully one degree of separation from a set of investors or
and trust. It's about trust. If you know somebody there, it's trust, right? And
right.
Bill, you talked about one thing. It's interesting, and I want to make sure the audience understands the impact of wow. And so you talk about wow in the first sentence, and can you describe it for them? Because sometimes, I'm dealing with technical founders, and they're, they look at marketing and sales as voodoo. They don't understand that there's some showmanship about getting investment. Can you talk about that? About what wow is and how they can use it?
Yeah. Well, so I talk about it in terms of what makes investors fall in love. Right? As I said before, the secret to your success as an entrepreneur is to get an investor to fall in love with you, or some other motivating emotion. But so the question then is, why do investors fall in love, right? And so VCs fall in love with teams. So when we see a team that has extraordinary credentials and they are articulate and they're right on it and they're obviously working together well, and we say, boy, this team, they're going to pull it off. It may not be quite right now, but we know they're going to figure this out. So we fall in love with teams, and that's kind of a human reaction. we also fall in love with technology. And we know this is a bad thing, but we do anyway, because, we're kind of, gadget freaks. And so when it could be the nerdiest team with, pocket protectors and whatever, and they come in and they can make bits do something that bits have never done before, and we can, if you can demonstrate a technology that is just dramatically superior, breakthrough technology, then that gets us to wow, for obvious reasons. Third way we fall in love with visions. So we fall in love, it's got to be the right combination of team and technology, but they have a vision of making a dent in the universe that is both, compelling and indeed credible. And my favorite example of this is a company we invested in called Delight Design. And these guys, it happened to be four graduate students from Stanford who had developed a solar rechargeable lantern that was cheaper and better than kerosene for the 2 billion people on the planet who do not have access to reliable grid electricity. Okay. So they come in and they sort of talk through this story about, 2 billion people, they're unconnected, they're using kerosene, their houses burn down, their kids get asthma, it creates carbon, and show us this LED lantern that they've designed and built at Stanford that is cheaper than kerosene. And we go, oh my God, this is amazing. But this kind of, it kind of feels like one of those social do-good philanthropic investment things, And they came over the table at us and they said, you don't get it. If we're going to change the lives of 2 billion people on this planet, we've got to build a big, successful, profitable, global, high technology corporation. And we go, whoa, we love these guys. So we were the first investors in Delight Design, and God bless them. God bless them. They are the leading solar lighting company on the planet. They have been successful across South Asia and Africa. Partnerships with all sorts of global companies, like Total and Philips. And, unfortunately, good news, bad news, they had a great exit last year. So we cashed out, but it just broke my heart not to be an investor in them anymore. Just because it was just such a brilliant, beautiful, wonderful vision that they actually executed on. So the point is, wow is an emotion, and there are a whole bunch of ways to get to wow. And as an entrepreneur, you've got to figure out what you have that is your wow. So it's not always exactly the same recipe, but somewhere it has something to do with some compelling value proposition that you've got and some unique, unfair competitive advantage that's going to enable you to, beat out everyone else out there and build a big, successful, profitable company. So, you got to put those together to get a VC to say, wow, I really want to invest in this company.
No, that's great. So we're coming up to the top of the hour.
Sorry.
And so final thoughts, Bill. I mean, there's a lot of, we talk to people all over the world all the time, whether they're in China or Singapore or Russia or Europe. I mean, and there are challenges out there today. So what could you give them? What's one piece of advice that you would tell entrepreneurs from around the world today to be able to get their company global? What would you say is one piece of advice that's critically important today? Yeah.
Well, so, every entrepreneur has the same challenge, which is pretty much every entrepreneur, they start from zero, right? No customers, no revenues. And they've got to build a, highly successful company. So everybody's got the same challenge. So what's the key? What's the key to being successful? And sort of my encouragement to every entrepreneur is to make sure that inside the company and all of your communications outside the company, you follow the rule of what I call the three. Sorry. the three C's. Okay, this is an English language thing, but you've got to be clear about what you're doing, and you've got to be able to communicate it clearly. How else can you win customers? How else can you attract employees? How else can you get investors if you are not clear about what it is you're doing? And it's stunning to me how many entrepreneurs I, meet and I talk to and I say, so tell me what you're up to. And they go off on this road trip of just talking about, I don't know, they'll talk about their technology, they'll talk about their product, they'll talk about their background, they'll talk about, okay, maybe I want to know that stuff, but can't you tell me in one sentence what business you are in, right? Just be clear about what you're doing so I know, why I should care about your technology or your team or anything like that, right? So you got to be clear. And then the second C is you've got to be compelling. You've got to have something that's dramatically better. You've got to deliver a benefit that's going to cause your customers to fall in love with you and say, you're going to rip this technology out of my dead hands before I'll give it up, right? I mean, they've got to love your product, so it's got to be obvious what your compelling value proposition is. That's the second C. The third C is you've got to be credible. And this is where almost every entrepreneur blows it, right? They'll say some exaggeration about their, total available market or their, customer pipeline or their financial projections or whatever. They blow their credibility. And so the third C is you've got to be credible. You've got to give us confidence that what you're saying is true. So if you're slinging a whole bunch of BS, we're just going to back away, right? And so you got to be clear, you've got to be compelling, and you've got to be credible. Those are the keys to building a successful team, to building a successful customer base, to acquiring investors. Clear, compelling, and credible. And that should apply to sort of every communication, every strategic plan, every pitch you've got has to be clear, compelling, and credible. So that's my,
That's fantastic
advice.
Your book, Getting to Wow. So I know Amazon, but what's any other places where they can get your book? What do you think?
Well, at the moment, so we decided to publish as an ebook on Amazon, to get it out there. We thought that would be the simplest, easiest way to get it out there at the best price possible. So, unlike some VC authors who obnoxiously write these books and charge $20, $30, $40 for these books, we decided to make it accessible to every entrepreneur on the planet by offering it digitally for the low, low price of only $9.95. So
there you go. Sounds like a commercial I used to hear from the East Coast. The prices are insane.
Yes.
Great book. Great book with amazing insights. Seriously. I mean, I've heard you speak many, many times. We've been together. You're, involved with a number of the companies that I've been involved in. So no, it's great.
Thank you, Gary. Thank you so much. I really appreciate it. And I appreciate your, giving me the opportunity to share with your audience.
Well, how do they get a hold of you too? We've got some companies, specifically AI companies from around the world. How do they get a hold of you to be able to?
Well, you can find me on LinkedIn. That's pretty easy. There you have my name. And my email is Reichert@garage.com or or bill@pegasusventures.com. So, three ways to find me. So, and indeed, I will even tell you that, my email is on the Garage website. So if you forgot, you can always find my email on the Garage website. So it shouldn't be that hard to track me down. But the best way to get to me is to say, "Hey, Bill, I bought your book and I loved it."
Just fell in love with it. I was wow.
That's part of, how, if you want to get me to fall in love with you, right?
Buy his book.
That's okay.
All right. Sounds great.
Okay. Thanks a lot.
Thank you very much for your time.
I
appreciate it. Good talking to you, my friend.
Thanks a lot.
Bye-bye.
Take good care. Bye-bye. And say hi to Peter. Say hi to Peter for me. I haven't seen him in a while.
All right. Sounds great. Take care.
Bye-bye. Thanks.
So stay tuned for part 2. Coming up now with the amazing Peter Loukianoff. Peter?
Hey, Gary, how are you?
Hey, it's great to see you today.
Hey, Bill was wonderful. I think just great advice for entrepreneurs. So great to have him on, and good to see him as well also.
He said to say hello. I don't know if you heard that.
I heard it backstage, yeah.
So, Peter, it's great to have you on the show today. So can you tell the audience, you're a venture capitalist, Strawberry Hill Ventures, Almas in the past, a lot of stuff in Russia, a lot of plus all over the world, Berkeley grad, MBA, engineering, everything. I've known you, I don't even know anymore, years, 15 years, 20 years, seems like forever. But
yeah.
So Peter is an amazing guy who helps companies from around the world. I specifically been involved with companies from Eastern Europe and Russia, but has done an incredible job of taking companies out. So it's with great pleasure to have you on the show today, Peter. And, with Modern Venture Partners, can you tell my audience a little bit about that and some of the things you guys are doing?
Sure. Well, first of all, thank you, Gary, for hosting me, and congrats on your success too. I think what you're doing is fantastic, reaching out to entrepreneurs globally. And, the great thing about the internet, it's really made entrepreneurship global now. And so you don't necessarily have to be in Silicon Valley, although, as Bill mentioned, there's certainly some advantages to that. And if you want to get local, Silicon Valley venture funds, definitely be here. But anyway, that was great advice, and congrats on your distribution and your show. So so Modern Venture Partners. So we were on, a few weeks back talking about a different topic, but here, we just launched actually Modern Venture Partners about a month and a half ago. And so we spun out of a prior company that my founders and I were part of. And so, to Bill's point of being concise and focused, we are all about making venture capital personal again. And it's really about, focused on what we call high net worth individuals and family offices. So that's our particular market. But we're basically making venture available to them, or giving them access to venture capital in a very similar way to how endowments or pension funds have access to VC.
Yeah, so you got some interesting companies too. I know, Peter, we were talking about a few of the companies you're involved in, and incredible, the stalwarts of Silicon Valley. Can you talk a little bit about that? What kind of companies you're looking for and companies you're investing in? Yeah,
so Modern Venture Partners basically has 2 products. So what we have, and again, all this is focused on, high net worth individuals that we call qualified purchasers. So these are folks typically that have $5 million and up in assets to invest, or assets under management. And we provide 2 products. One is a fund that we call a vintage. And the reason we call it a vintage is because it happens every year. So every year we raise a new fund, and there are about 25 investments in that fund and in that vintage. And again, that happens on an annual basis every year. And then our second product is what we call a deal share. And this is a individual deal by deal opportunity where investors can invest in these these companies through our deal shares, and get positions directly into companies. And the beauty of it is that the vintage provides a diversification. With a single check, you get sort of instant diversification through the portfolio. But the deal shares allow an investor to go in deeper into a company if they really love the opportunity, if it fits their portfolio. So they have sort of total control to sort of build their portfolio how they wish. And then in every case, what we do is we follow other investors, and we follow top tier lead investors into companies. So investors that normally cannot get into a Sequoia Capital and Andreessen Horowitz and Excel Partners, Kleiner Perkins, et cetera, through us are able to do that, and able to invest in deals side by side with those top tier funds.
Interesting. And so, I mean, you've had a lot of successes. I remember we talked, was it Quick to Skype? So what's your, you're out there, what are you looking for in terms of startups today? What really is exciting for you?
Well, so by design, we are, we're a diversified fund. So we look pretty broadly across different stages and sectors, but all of them have a sort of a top tier lead investor. And so really, it's a pretty broad spectrum. What I can do is I can just tell you maybe about a company that we're bringing to market actually in a deal share next week. We originally
that sounds great.
Pushed out to next week. But yeah, it's a company called Luminous Computing, and this is a company that is building a photonics chip. And if folks are familiar with Moore's law basically says that compute power doubles every 2 years, and that's sort of been the law, of computing for the last several decades. And however, with AI applications, what's interesting is instead of demand doubling every 2 years and keeping up with Moore's law, it actually is far exceeding that. The demand for AI applications, for a number of them, is now doubling. Compute power is doubling every 3.5 months. So think of that. I mean, difference that normal compute power is doubling every 2 years. Here, AI applications, the consumption of that compute is doubling every 3.5 months. So the existing technology just is not keeping up. And so what Luminous Computing is doing is creating a photonics chip that will be able to transmit data at the speed of light and be able to really meet this demand that is happening with, especially in AI applications. But you can imagine how many other things it will affect. And if this company is successful, and we're certainly betting that they are, and they've had a lot of great progress recently, this is a company that can be on the scale of an Intel or an NVIDIA or companies like that. So we're pretty excited about it. It's got an amazing team that is building this. In fact, they've already run a first chip run at TSMC. They've got some additional relationships with other foundries and so forth around the globe. That was just an amazing sort of feat for a startup of this stage. And but it's also got some interesting people around it. In addition to the fantastic team that's been able to execute on all these things today, Bill Gates is an investor. He's got a board seat. It's led by the deal is led by one of the founders of PayPal and Founders Fund, Luke Nosek, who is investing in the company. And so we are now doing a deal share coming up next week for the company, and our investors are going to be evaluating that, and if they choose, they'll be investing. But our fund's an investor as well.
Oh, that's great. So Bill Gates and one of the founders of PayPal are on the board of the company.
And Founders Fund, yeah.
Oh, wow, that's amazing. So what do they do? I mean, we have people from all over the world, high net worth individuals, watch my show. How do they, what can they do? How do they get into?
The best way to do it is, and again, there's zero obligation, really. We sort of make it very simple and easy for our investors to interact with us. They just go to our website, which is MVP, stands for Modern Venture Partners, MVP-VC.com. and they just go in there and register, and they can start seeing deals. And if they are a qualified purchaser, they'll start seeing opportunities like Luminous, like some others. We recently completed a couple of other deals. We were in a company called Loft Orbital that is basically doing what AWS does in computing. It does that for satellite business, growing very nicely. To top tier Midas list investors on the board of that company. We just invested also in a company called Lex Markets, which is in the real estate space. I think Alan Patrickoff is sort of a legend in the venture capital industry, is on the board of that company, and now doing Luminous. And usually we probably have 2 deal shares a month that we'll do. Sort of on that general pace. So it's for an investor, again, there's no obligation. They can just register, start seeing these deals. If they decide to invest, great, they can do that. And what we do is we provide them with nice sort of a what we call a deal pack that includes everything you would need to evaluate a deal. And in fact, the reason why we call it, by the way, a deal share, excuse me, is because it's meant to be shared among family members or friends. So a lot of high net worth individuals and family offices have other people that they typically invest in, or within a family they're investing. And so our deal shares are meant to be shared. And so these deal packs really give an investor everything they need to do to evaluate a company. And now obviously they can go do their own due diligence, but in that deal pack, there's a industry dossier, so you can get up to speed and smart on the industry. There's typically a webinar that's a video of the CEO talking, or founder talking about their company, how they got started, the vision, all this other things in terms of where they're going, and then also an investment memo, and again all the details around it as well. So it's a great way to really evaluate a deal and share it amongst friends as well, and family members.
What about startups? What are you looking for, and how do they get a hold of you?
Well, the startups, we actually we take a little bit of a different approach. We actually go look for the startups ourselves. Now, certainly, if there's a great connection or relationship we have with somebody, we will we'll sort of take some incoming deals. But it's normally we're out there looking for the companies, and we sort of select the ones that we want to go into. Again, having said that, typically for much earlier stage companies, and we will do some seed, but typically we'll get a referral from somebody, one of our co-investors or friends like yourself or others who see interesting opportunities around the world and sort of point them in our direction. Again, we're typically coming in for about 20% of a round. Our positioning is that we want to be the and actually this isn't really around today, but our positioning is that we want to be the absolute best co-investor that's out there. So you got the Sequoias, you got the Excels, the Graylocks, all these top tier firms, Founders Fund, etc., that are phenomenal lead investors. And so we don't compete with them. We come in for about 20% typically or less of a round. When they lead a round, there's typically some portion of that left. And we come in there, and our positioning is to not compete with those firms, but really to come in and be the absolute best, second investor in the deal, and really help drive revenue. So that's sort of what we do in our portfolio companies and how we add value to them.
No, that's great, Peter. So what do we have? Any words for the startups out there? Any words of wisdom? And
well, I think Bill actually gave some great advice, and I think that the other thing that often he mentioned a lot of these things, but I think oftentimes entrepreneurs don't really understand how venture works, and so I think understanding that is really helpful. So I think generally entrepreneurs, when they pitch a VC, I think it's important for them to know that what those venture investors are looking for, try to understand their portfolio. And I believe the best way to get into a venture firm is to get a referral from a successful entrepreneur that venture firm has made money with in the past. Mm-hmm. And as Bill said, a lot of these, we as a venture, class of people are not experts typically on the portfolio companies or those markets that they're in and so forth. I mean, our understanding of a market is really sort of much less than the entrepreneurs. And so if they can get a referral from a successful entrepreneur who that venture firm has backed in the past, I really think that's sort of the best way to get in, because as Bill mentioned, the competition is really fierce. And I think all the advice he gave was fantastic. But in addition to that, I would say you got to be smart about how you get into these firms and how you get a referral into them. Mm-hmm. And I would recommend that being one path to sort of get into some of the top firms.
No, that's great. Well, I really appreciate you taking your time to meet with us. What's one piece of wisdom, additional piece of wisdom that you would give entrepreneurs that are out there today during these pandemic times?
Well, I think just, be creative, keep at it. As Bill said, deals are being done. I agree with that we haven't really slowed down our pace. In fact, if anything, we're just continuing to be on pace. I think we're going to be over this whole thing at some point, obviously. And so we just got to stay positive and continue to be creative. And I think this is a time to be entrepreneurial. You're going to take a negative and turn it into a positive. And so I think that's something we can do. And like Bill said, a lot of firms now are very used to doing these kind of things off of Zoom and so forth. So it's much easier, I think, for in some ways for entrepreneurs to get some attention.
Anywhere from 2 to 4 events every single day.
Yeah.
Speaking around the world, from Singapore to Australia to Russia. I mean, you name it. This is a great time. The key is to be able to use the medium wisely, because we're not going to find, this is unprecedented time. We haven't been in a situation where we have a Zoom where we can still communicate. This isn't 1918 during the Spanish flu. Exactly. This is an opportunity, and Peter's right on target. We got to stay positive, believe in your dreams, visualize, get shit done is critically important. The other thing is use that warm referral network, because trust is important. And if somebody gets an introduction from a trusted source, they're much more likely to be able to take a look at it. So great advice, Peter. Thanks for coming on the show today.
Gary, if I just have another minute just for the investors in the group, because I know we're primarily focused on them for this, but the one thing that's really also changed in the ecosystem is that private companies now are staying private longer. And so in the past, you were able to go public and buy an equity or something like that after an IPO and still have time to run that company up and make a lot of money on it. Well, today that whole equation's flipped. The companies are staying private longer, so when they go public, they're not going public at a couple of $100 billion in value like they did, in the 80s and 90s. Now they're going public at multiple billions in valuation. And so that's another reason, I think, from an investor standpoint, why getting into private investments is so important, because that should be a staple of any high net worth individual and family office portfolio. And so that's something we're providing, and we'd love to hear more from investors who we can back these companies, these great companies that you're talking about. So again, our website, mvp-vc.com, or you can just type in Modern Venture Partners and you should be able to find us that way.
Sounds great. Thanks, Peter. Thanks, everybody, for joining us today. We appreciate it, and look forward to seeing you on our next show.